It is such a pleasure to be with you right here on the big picture on ET Now. It is indeed my pleasure to be welcoming my very esteemed panel. We're calling it the Super Budget Panel for ET Now. Our consulting editor, Swaminathan Iyer, our consulting editor also, Maitri Basturmat. On his left, of course, Arvind Mayaram, India's former finance secretary, and the man who actually put the first budget for Mr. Jaitley together, Mr. Mukesh Butani from BMR, and of course, Mr. Sanjay Nair of KKR. Thanks very much, each one of you, for being with us. Indeed, my pleasure to be joining all of you as we discuss and debate what the budget tomorrow will look like. Less than 12 hours to go, no point speculating, but let's really talk about the big picture, so to say. And Swami, if I may begin with you, and let's set the context for this debate, so to say. A lot of people believe this is going to be the most crucial budget for the Modi government, perhaps also the boldest. Do you subscribe to that view?
In the normal timings, the third budget is typically the one you go for it. You tend to slow down in the second budget and do very little in the last one. In the peculiar circumstances you have, perhaps you have a bit of it this year and a bit of it next year. But I wouldn't be surprised if you go for it this year. The problem this year is that we are in the middle of a potential global collapse, or let me say at least an Asian collapse. This is a very different kind of circumstance from a normal one where you can say, let me be bold, let me do all kinds of things. If you're seeing a kind of replay of the Asian financial crisis, it is not necessarily the kind of time when you do especially bold things. But I would certainly say that let us assume that things are going to be normal. And if you get that Asian collapse, then you have to change track in any way, because all the budget assumptions will then become false. So yes, this is an opportunity for them to go ahead. I would simply say by instinct, neither Modi nor Jaitley is particularly bold. So I would not expect this to be a particularly bold budget.
All right, not a particularly bold budget. By instinct, they're not bold. Do you believe the global gloom is also reducing the elbow room to be bold?
To some extent, I think it's also possibly the state elections that are coming up. We have some big state elections coming up this year. And I think the Modi government is not willing to take, the bull by the horns. And frankly, I think in India, reforms is always very incremental, Supriya, because that's the way of democracy functions, frankly. So I don't think you can expect bold budgets even at the best of times. This is not particularly the best of times. So I'm not expecting a bold budget. And frankly, I wouldn't really want one to. I'd rather have a pragmatic, workmanlike budget which achieves what it says.
It looks like corporate India differs with both of you, because in our CEO poll, it's time to launch that very important poll that we have done with the top 50 CEOs in India. 59% of them believe that this is going to be the boldest budget of the Modi government. 27% of them, of course, say a no, and 15% are undecided. They cannot make up their minds either which ways. Ms. Mayaram?
What they're really saying is this government is fairly cowardly. The next two will be even more cowardly.
All right.
And corporate India has to make the right noises.
Let's come to you. You started off with Mr. Jaitley. His first budget that was presented in the first 40 days was an exercise which many people thought should have undone what the previous government did. You've received some flack for this, perhaps unknowingly and unreasonably so. But I want to get down to the basics. And the first basic is fiscal roadmap. Everybody, every stakeholder in the Indian economy is today talking about that. I know my two consulting editors are divided on that issue. Which side of this debate are you on? Because according to our survey, 61% of the CEOs that we've polled expect the government to stick to the path of fiscal consolidation. 27% are right now saying no. What do you think they will do? Will they stick to the one-year delay, or could they delay it even further?
I don't know what they will do, but I certainly believe that the most important thing at this point of time, especially when there's a crisis, as Swami says, there's a huge global crisis looming ahead of us.
That's right.
One big factor that everybody looks at is the credibility of the government. How credible is the government and what it says? Now, every time when we move away from a fiscal consolidation path, and we know that fiscal consolidation is necessary, apart from other evils of government over-borrowing from the market, crowding out the private borrowers, and investment is already down, the problem is that of credibility. So I do believe that the government ought to stay the course and go forward with fiscal consolidation. Now you look at the numbers in that sense. Whatever has been given as to how you should, kind of delay the consolidation. You are going to borrow 50,000 crores more in a budget of almost 19 lakh crores. 50,000 crores is not difficult to find, especially if the oil prices have been so benign. And the government has had a huge saving on that account.
That's right. 1,40,000 crore according to some estimates.
Yes, but if you look at everything together, the additional excise duties which have been mopped up, the subsidies, less subsidies given, or the under-recoveries of the companies, etc., the number is much larger.
Right. So you do believe that finances and the whole argument around finances is a little too overstretched. Sanjay, I'm going to come to you, and then Mukesh, I'll come to you next. You have the advantage of being the global insider of sorts. You're just coming back from an overseas trip. What is the mood like? Will they be forgiven if they were to stretch the fiscal roadmap by another year maybe, or perhaps let 3.5% expand by one more year? What according to you should they be doing?
Yeah, I mean, I think what you're hearing is that the credibility aspect is important, but I think if you bust it by, 10 or 20 basis points is not the end of the world. I think the question really is about the quality of the consolidation and the process. I would really think that we don't have too many speeches that lay out a vision. I think this one should hopefully lay out a vision for next 3 to 5 years.
Right.
And then you have a clear path to that. So consolidation, I think, is important to have, but I think the quality is more important. I think that's absolutely critical. I don't think people are that fussed about being 3.5, 3.6. If you stand up there, you lay out a vision very clearly that, look, I got to do a few things. We got a bit of boost to give because the global economy is in turmoil as well. We've got to create some more investments, more of a consumption stimulus, a bit of that. I know that's a little tricky. So I think it's a balancing act for them. I don't think missing it by 10 basis points is going to create a big issue.
Mukesh, let me come to you. The argument that is being given in favor of fiscal expansion, I also think even in the economic survey, has been that, there are liabilities. There is OROP, there is a 7th pay commission. I somehow don't understand that because there have been pay commissions in the past. And the second side of that argument is, there are investments that we need to make. If the government is not going to take the lead, the private sector investment is not going to be crowded in. Do you believe it will all then hinder on the fact, is the government increasing its fisc to meet the liabilities or to make the investments that are required?
So I think that's what international credit agencies would be looking out for really, that if I have to speculate, I think that he will ease out insofar as the fiscal deficit is concerned, but the elbow room that he would be left with, where is he really going to deploy his resources? I think that's going to be a challenge. The challenge is equally there on the revenue side. So if you look at the economic survey, he had a leg up of 73,000 crores just on excise duty collection, increase in service tax rate, and the levy of cess. And this is all on the petroleum products. This was predicated on a significant fall in the average oil prices from 14.15 to 15.16. The economic survey now says that they are looking at the oil price of 35. So he's not going to get that leg up. You're already missing the target of 50,000 crores insofar as corporate tax collection is concerned. So the challenge would be that if he lets go of fiscal deficit, where is he going to get the money from?
Sure.
So there are two challenges that he has. One, where is he going to deploy? And I think it is absolutely necessary to deploy because private enterprise sentiment is not going to go up in 15-16.
And there are more reasons beyond the budget why they're not investing.
We know the state of affairs insofar as the banking system is concerned. But I think if he brings out deeper administrative tax reforms, he can improve tax compliance and then push up the tax collection, and that's the only way he'll be able to miss the target. If he, meet the target.
That's
and if he misses, then I echo Sanjay's sentiments, there is a credibility issue, and hence it's imperative for him to lay down a roadmap for the next 3 years.
Swami, what do you think should be done? Enough and more has been said about, investments, all right, but there is also this point that somebody raised a little early on, not in this debate, but in a previous debate that we did right here on ET Now, is that it's all right to say invest more in infrastructure, but you've also got to keep boosting consumption, because if you're not going to boost consumption, who's going to consume the roads and the ports and the airports that you would want to build?
Okay, consumption is already a strong point. On the infrastructure, again, I warned the other day and I warned again. I said if Mr. Modi wants to build bullet trains and Gadkari wants to build waterways, it's a complete waste of money. So please don't tell me that, merely because it's infrastructure, it's useful. There is good infrastructure and terrible infrastructure. So you first of all have to choose not only whether or not you're investing or consuming, but what kind of infrastructure. Secondly, as the economic survey points out, there are a large number of divestments possible. There are divestments possible not just in tourism. I mean, he says tourism finance corporation, etc. Even our Reserve Bank, you can divest that equity to recapitalize the banks. But over and above that, you have the Kelkar committee saying, the main risk in infrastructure is at the time of the construction when you get the delays and the problems. And once the road is built or the port, the risk. So why don't you just sell your old roads and use the money to build new routes. Sell the old power stations, use the money to buy new. So, I mean, in other words, there are so many ways of finding money apart from depending on the budget. To make this a make or break issue of budget is required to raise infrastructure spending or public spending is just not true.
And then the whole argument, sure, yes.
Let me remind you of the much maligned budget of July 2014. There was a clear statement by the finance minister in the budget speech that the government intends to bring down its shareholding in public sector banks to 52%, which would have given them close to 1,25,000 crores.
That's right.
When we are talking of recapitalization, etc. That intention was there in the budget itself. I mean, if you
I'm perhaps getting it from one of the architects, so I completely take it at face value, but just stay tuned to that because I want to discuss, absolutely, I want to come to banks in a moment from now, but Maitri, if I may, you know, 4 of my panelists here seem to suggest that there is a credibility issue. Let's stay with the fiscal deficit target. I want to ask you a broader question.
The original FRBM deadline was FY08,
right.
2007-08.
It has been breached more than yes, absolutely.
I mean, it's been breached by such a ridiculous number of years, 8 years. And in 2000, after the financial crisis, under the UPA government, it shot up to close to 6%.
Right.
What happened to our credibility? In fact, if you look at the rating agencies, frankly, they improved our outlook when the fiscal deficit went up.
My broader question, my logic, it is all right. We can convince our stakeholders here. We can convince the the global ratings agencies if they see growth pick up and all of that. The one man I think they will find very difficult to convince will be Raghuram Rajan, because he's really put the ball in their court and said, my next action is going to depend on the fiscal consolidation that North Bloc does.
Frankly, Supriya, monetary policy is a very broad brush instrument. It has acts with a long lag. It's very aggressive because it helps borrowers more than the savers. Because when you cut lending rates, it is the borrowers who are a much smaller segment of the society than savers at large. In fact, one of our biggest problems is that gross domestic savings and financial assets has shrunk dramatically. It's only about 7% today.
Right.
So you need to increase your gross domestic savings, particularly from the household sector, which is the largest segment of the gross domestic savings, and in financial assets. So you cannot really do that through monetary policy. Monetary policy, as the G20 communique now says, has reached its limits even in advanced countries. Fiscal policy acts much faster. It's not the best, I agree, but at 3-4%, if you increase your fiscal deficit by a few basis points, as Mr. Nair was saying, it's not as if the heavens will fall. So the quality is important, and if you look at the government's figures for December, actually the quality of the fiscal deficit improved. The revenue deficit to fiscal deficit ratio, which is perhaps a critical number, which is supposed to be targeted at 71.8, has come down to 66% at the end of December. It was way above 80% last year. So there has been an improvement in the quality. So what you need to focus on is not so much the quantity as the quality of the fiscal deficit.
Fair point indeed. I want to leave fiscal deficit for a moment from now and just quickly tell the viewers what the CEOs here in India Inc. are saying. I mean, just on the fertilizer and fuel subsidy, food subsidy part of it, the 46% people believe they can cut that further. I don't know how are they going to cut the food subsidy. It's politically suicidal for any government. But let's shift the focus back to the liabilities that we're talking about. Let me quickly begin this round of discussion with you then. 7th Pay Panel Commission recommendations have been talked about so much in print and television space that it almost seems unprecedented. But governments in the past have executed this as well. What is the precedence? Can he go and execute just a part of the recommendation, just give the salaries, not give the HRAs, save a little bit on that? Is that a precedence? Can be done?
Frankly, I don't know whether there is a precedence, because I haven't heard that at any point of time Pay Commission reports were not accepted completely or fully. But at the same time, I must also say that if there is a fiscal crunch, there is quite a possibility that you can take, because there are a large number of recommendations there, that you can do that in a staggered manner. So there is that possibility, cannot be ruled out, and the government could very well exercise that right.
Fair point. Let's move focus and talk about what would the two of you want from this budget. What should the legs of this budget be? Housing sector is a sector that's ranging very, very high on our CEO wish list. 59% of them believe there will be additional incentives to revive the real estate sector in that housing as a chunk of this. What would the budget legs be on? What should the focus of this budget be on? Sanjay, you want to go first?
I mean, just at a broad level, I think that there has to be, firstly, I said it can't be a big bang, right? So it's got to be pretty step by step. I think you have to first recognize what the issues are. One of the issues I think we have just as a country is that we just don't seem to use the word contrition. We don't admit the issues we are facing. So you have an issue of a big fiscal absolute amount, forget the percentage for a minute, that's a big monkey on the back, so you don't have savings, inflation doesn't come down, all the issues. So I think one has to attack that. But you also need to boost investment and consumption. So I would just go step by step. I think there is a few things to be done on the rural sector side, few things to be done on good execution of the public expenditure already committed to. So the planned expenditure should, move up, but move up credibly. And third, I think really attack the issue on the banking sector, which is quite dear to, a lot of investors' hearts, because ultimately that becomes the big bottleneck in the future. So if you have a big fisc that is not moving in the right direction or not, the quality isn't improving, and you have a big bank debt sitting on top of that, frankly, you're sitting in a situation where you're really lock-jammed in terms of getting the investments going. I think finally, I would say, just executing on what you promised. I mean, the Make in India program, I think, is fantastic. I think if those things take leg, India doesn't have too much of local savings, but you're going to get a lot of FDI. And I think those measures will show up over time. So between public savings coming in through the public sector and through government spending and some of the FDI, I think we can tide over the next 2-3 years in a very constructive way. But there has to be, sincerity of execution. And I really think a step-by-step budget would really be helpful. I mean, I'm not an expert who's tracking what they did with the last budget, but...
You want to add to that?
Yeah, so just to supplement, I think sectors such as irrigation, infrastructure, particularly urban infrastructure, roads and posts should receive high priority. And of course, the overall from a rural standpoint, health and education are the two important sectors. The challenge still is where is he going to get the money from? So you asked a question, is there anything transformational in this year's budgets? In my view, budgets are never transformational. Budgets are good statements of intention. The proof of the pudding lies in eating, and then thereafter you looked at the execution. I think what follows the budget, in my view, is equally important, whether that is a legislative agenda. So, for example, I would say that if the bankruptcy code is there with a joint panel, the question is whether it gets cleared in the budget session of the parliament or the monsoon session of the parliament. That needs to be seen. Last December, they cleared the amendment to the Arbitration Act. They set up the commercial courts. Now, what is the impact of that? So I think you need to do an impact assessment of everything. And thereafter, tax reforms. For the first time, we realized when we surveyed CEOs that tax is now an agenda in the boardroom. You never heard of. Tax people were the most insignificant.
Actually, tax has never been spoken about before a budget as much as it's been spoken about right now.
But actually, if you look at the budget document, the only thing that the finance minister places before parliament is the finance bill.
That's right.
Which is really legislative amendments to the Income Tax Act and all the other legislation.
Which is why we have you here, Mukesh.
So the question is, and I think on tax, I think there's lots on his plate insofar as tax policy is concerned. So, he is going to put out a roadmap for reducing the corporate tax rate. But what about the deeper administrative reforms? He's got volumes of reports from Justice Ishwar, Dr. Shom, Tax Administrative Reforms Commission. The question is, when do you start putting all of those in implementation?
I have a lot of questions on tax, and we'll dedicate a segment to that because I've got a CEO poll on tax as well. We'll step into a really quick breather here on this show, the big picture, and come back and discuss divestment. The other big elephant in the room is, of course, PSU Bank recapitalization and, of course, taxes that have made markets rather nervous. Stay tuned to ET Now. This is the big picture, and you've got ET Now's Super Budget panel to discuss and debate a lot of those issues that are being raised. I'm going to begin this next round of discussion with the big elephant in the room, and that is what should be done with PSU banks. Maithili, that's a subject very close to your heart. Let me first reveal what the CEOs expect what the government should be doing in the budget. We asked the CEOs questions about, do you expect the government to substantially increase the money for PSU bank recapitalization? A resounding 63% of them say a big yes. That's not something that you totally agree with, do you?
Yeah, because I frankly think it's not money well spent for the simple reason that that kind of money is not sufficient at all. So it's neither here nor there. So actually the problem with bank capitalization is that it's a bit of a chicken or egg situation. Unless banks lend, you're not going to get the economy improving.
Right.
And unless the economy improves, banks are not going to lend. So which one comes first? And what people don't remember is that in the late 90s, the NPA number was close to 14%. The number came down to less than 3% by early 2000s when the economy improved. So clearly, economic revival is part of the answer to banks needing less capital, number one.
True.
Number two, I think the problem with the Reserve Bank is that it's been trying to get more aggressive than Basel. So many of the requirements that the RBI has imposed on the banks are higher than Basel. At a time when we're already struggling to comply, it doesn't make sense. And unlike in the Western countries, where Basel is essentially meant for private sector banks, in India, these are all public sector banks which are owned predominantly by Government of India.
True.
So what are we trying to see when, like, say, something like, say, liquidity coverage ratio? When you already have an SLR of 21.5, where is the need to have another liquidity coverage ratio? So I think the RBI has taken a slightly theoretical and textbook approach in asking for aggressive preemptive provisioning, as a result of which banks require much more capital on paper. And if the government were to provide that money, then it means you're providing money for the banks, which is not enough in any case for their needs. And number two, you're taking it away from essential public investment. So I think what you need to do is kind of step back from banks and tell them that, tell the public, tell everybody that these are public sector banks. There is no risk. So I'm not going to recapitalize them so aggressively and then use that money elsewhere. When the economy recovers, a lot of the sectors will automatically look better.
The counter argument to that, of course, is that when the economy does recover, banks will be required to lend. You want to make a point there?
I want to make a point to Maithili that I think, you know, we can say RBI is aggressive of this.
Yes.
I actually think that having interacting with the banks on various stressed assets, it's quite amazing that a significant amount of the NPA today is the funded interest itself. So you've been funding interest on the principal, and you know, therefore, when you look at the stress levels, you find that you have just generously done that, and then the NPV and the discounting the banks do by using 8% discount rate. So it's quite, I would say it's not fair to say that RBI is being aggressive about it. And I don't think the answer lies in the recap of 70,000 crores or whatever. I mean, my answer would be just, why the hell do we own the banks? I don't know why the government owns all these banks.
When the private corporate sector, not that I'm kind of putting a plea for the private corporate sector. Many of the promoters, yes, do need to be punished. But the point is that we nurse the SEBs. What are we doing? Are not SEBs NPAs? Isn't the Food Corporation of India an NPA? But just because they are government-owned, we don't call them NPAs.
Sure.
It's a name. You just call it an NPA.
You know, you raised a point there early on. You said in the budget document of 2014, the government had committed to come down to 52%. I know that's a very valid, economically sound argument. But in market conditions like these, do you expect banks' stakes to be sold?
When do you see the market conditions, in what way? I mean, in the last 2 years, for instance, market conditions have been, I mean, the stock market has also been very high.
Right.
The equity market has also, you know, kind of played up quite significantly. So I think we can continue to wait for the best time. But that,
and there's never a best time to
difficult.
time the market.
Yes, but the question is that the government must, and the question, if you do retail sale of shares, then the citizens of this country own the bank. So even if they get it cheap, so what? See, as long as you're not doing block sale, ultimately it's a public sector bank. And if the citizen of this country gets a share which is cheap and is going to make money at some point of time, so be it. But therefore you need to do divestment as a program rather than waiting for the right time, because then there is a moral hazard that if I, as an officer who is, you know, in the divestment position,
how do you do that actually? You could be called up.
I take a decision today to divest, and tomorrow the stock market fails, and therefore somebody is going to point fingers at me. So you need to do it as a program, and this is what we advocated. Then it should be a program. Every month we will do this on this day.
I have a section on divestment, and I'm going to spend more time there. Swami, I'll let you have the final word on this whole PSU bank recapitalization bit. Two sides to that debate. But do you believe the reason why the banks have ended in the mess they have is because of the political economy we live in and because of the political interference, and B, also the resolution of that is really political will. Should you dilute stake in public sector banks or should you not? That's a political decision which is perhaps not being made.
There is a political angle to this and there is an economic angle to this. Politically, there is no question that the government is able to use the banks for various things. I remember in New York when I exchanged with Jet Li, and he said, "Why you? What is this big bang? You give me one suggestion." I said, "You just privatize half the 10 worst banks." He laughed and said, "But you know, the banks, public sector banks are very useful for social purposes." He says, "You know, private fellows were not lending for infrastructure, and I'm able to make these guys lend." The answer is then you get all the loans to infrastructure. In other words, what he was defending was the right to politically direct investment to areas where sensible private sector fellows said, "Don't do it." right? I mean, now Maithili almost seems to suggest that this is a good thing. I think it's a terrible.
You have to decide. You need investment. You need infrastructure.
No,
you need infrastructure investment in this country. Either the government does it or the banks do it. If the government can do it, fine. But the government is not able to do it, so banks do it. Post 2008, private sector banks drank away.
I think the argument lies somewhere in between. It's in between. I think it's in between what Maithili is saying and what Swami is saying. And the reason is that you need public sector banks at this point of time in the economy. Because it is not simply dud projects that they're doing, but also because they are not only concentrating on very high value customers, like mostly the private banks would do, and therefore leave everything else aside. Now, if you look at, for instance, agriculture credit and otherwise, I mean, it's necessary. But at the same time, the question of 52%, why it came about in 2014 budget was that whereas the ownership shall still be public, but with 48% private investors coming in, the governance would considerably improve. The boardroom governance will improve. And therefore, it would become more efficient and more responsible in the manner in which they look at their lending.
The point I want to make is the idea that, investment is good. I said, no. Get away from that stupidity. Is this particular project good? Because a whole lot of investments are very bad, as we have just seen. Among other things, there is a standard practice to two problems. One is the gold plating, right? The project really should be 100 crores, but you get the machinery from subsidiaries and so on because 120 crores, and the public said, we are investing so much, it's all good investment. No. The first thing you need is a lot of guys saying no to that investment instead of treating all investment as good. The second thing is some of these debt equity issues. Because the thing is infrastructure, a debt equity of 70-30 is perfectly okay. In situations where there's no environmental clearance, there is no coal linkage.
You also have to go on points for these banks.
Let's be very clear. Citibank, HSBC, Standard Chartered, are these public sector banks? Look at the mess the city was in. It had to be bailed out by the American taxpayer. HSBC, Standard Chartered, these are private sector banks.
Sanjay, I want to just question you. You've been a career banker, right? Do you feel pity for the public sector banks in India? They're almost being used as vehicles of, social infrastructure, social schemes. Why should a bank be involved with something like Jan Dhan? They should be done by niche finance operators.
I'm actually surprised to hear that you think there's so much interference. I at least think, being in India for the last 12, 14 years, that the interference of using PSU banks has reduced considerably from the past.
But you don't work with the public sector banks, Sanjay, so you don't know.
No, I don't know. Yeah, maybe I don't know, but from what I hear is that it's much lesser than it used to be before. I think there has been some crazy lending, there's no doubt. I think there's been gold plating. All that is absolutely valid.
Look at the boards of public sector banks. Just ask Mr. Mayram.
Sure, I agree.
Who sits on public sector banks? But politicians with the most shady reputations.
Sure, but I think one point that does come out in all the debate.
Banking is really close to Maithili.
I've seen the rot that there is. And ask Mr. Mayram, who are the people we appoint in the public sector banks? All politicians with not a... I'm sorry, Mr. Mayram.
I'll tell you, it has changed in the last couple of years. Earlier, you are right, as you're saying, you was right. But now there is a very well laid out qualification for who is eligible to be. Now, with those qualifications, you could have a crony sitting there. That's a possibility. But it is not as if they're completely unqualified people who are being appointed.
No, they're qualified. I'm not judging anyone at all.
I want to make one point, I think, which Mr. Mayra mentioned and others mentioned. That back to the issue of execution. If you said something in 2014, we haven't done even that 2% dilution. When the markets were good, we could have gotten away with selling some shares in the retail. We haven't done it. So this is the point. You make the announcements, but you've got to get them going. Now when the markets are really bad, can you imagine trying to sell 2% or 2.5%?
Okay, now that you've touched upon the markets, let's talk about something that's making markets rather nervous. We put this question to CEOs and we're going to start with Mr. Mukesh Butani. Sure.
One moment I'll take of yours looking at these. There is a question of stressed assets. You see, whatever you may do with that, there is this a great catch-22 situation where there are a large number of stressed assets, lot of large corporates who could actually go and do good investments in the definition of Swami, they will do good investments, are at the moment not in a position to do so because their assets have got stressed out and so on. Now, once again, I'll take you back to the same budget of 2014, when a national infrastructure investment fund was to be set up. The original idea was that it would be set up on lines of TARP. And it would be professionally run. It will go and take out the equity of those assets which are in difficulty, and then turn them around, change management if required, and then sell the assets. That was the idea. it has got transformed into some kind of a mother of funds or something like
Right.
that, which is a equity, basically private equity. It will work along with private equity. Now, if you really want to de-stress projects at the kind which we are talking about now, it would be necessary for the government to revisit it and see whether such a fund can be put in place, which will act like TARP and take out the stressed asset, which will then also clean up the
banking balance.
The second issue is there is also another instrument which was put in place by the government, which is a very effective instrument, which was the infrastructure debt funds, where the debt of the banks could be bought out by these. But there again the problem is the same. If the bank takes a haircut on that debt, then somebody becomes liable and some inquiry shall happen. So how do you CBI, TVC, etc. So you need to create an instrument, a kind of a administrative mechanism, so that you distance these from those kind of decisions, some kind of a tribunal where you put out your case for a haircut, so that you are protected from and therefore IDFs have not really taken off because the banks are not willing to sell debt.
True.
Now these are stressed assets, so the one who will buy it by the banks taking a haircut.
Of course, but the discussion also comes back to willful defaulters versus victims of downturn and all of that. Let's leave PSU banks for a bit and let's talk about the other elephant in the room, like I was just referring to, Mukesh. A lot of people are very nervous whether they could be tweaking of the long-term capital gains tax. Markets almost gave a knee-jerk reaction, have been very, very nervous for that. Surprisingly, our poll seems to suggest 44% of the people we polled believe there is going to be a revamp. 44% believe there will be no, and then of course there are the 12% who can't decide on their minds. What do you think the government will do, given how the markets have been? They're off, what, 22, 23% from their recent highs?
Well, I first hope that majority of the people who voted are wrong.
Yes.
I think you have to understand the context of this period of holding. The 12 to 36 month, the 36 months to 12 month period was brought in to encourage investment in capital markets. And along with that, you brought in another levy called the Securities Transaction Tax.
Yes.
8 years, 9 years back. I think it worked very well. You also raised the Security Transaction Tax Act. 2014, what they did was they took away all unlisted securities, because they said that if it is capital markets, unlisted security doesn't make sense. So if you have unlisted security, the threshold is 36 months. So first of all, I've not been able to understand the rationale. Why is there a speculation of this nature that the period will go back? Is it because you want to have institutions staying invested?
That's right.
In a market-determined economy, in listed securities, you can't force anybody to continue to stay as an investor. So there are 4 kinds of people who get impacted. 1, foreign institutional investors. 2, domestic institutional investors. 3rd, high net worth individuals or corporates who have earnings from treasury income. And 4th is individuals like this. I think that this step, or this speculation rather, let me say, is regressive. I hope that they don't follow it. And if they do it, then I think the very intent of introducing the security transaction tax gets defeated. As a matter of fact, I'd also like to mention in 2013, Dr. Shom in his report said that levy of capital gains tax on all listed transactions should be agnostic as to who the shareholders are. It could be domestic, foreign, individual, corporate. So, from a simple liberalization recommendation that is there before the government, now to think about extending it to 30 certainly is going to make the markets very nervous.
I'll come to you in just a minute. What is your take on this? You're just flying from overseas. Are people nervous about this? Are they talking about it?
I think they are, and I think the reason is that you have yet another
retro,
sort of a question mark out there.
Yes.
So I think these kind of things could be just put aside pretty quickly. And I agree with him. It's a bit of a wish list. I don't think it's the right or wrong thing. I think we all wish it doesn't happen. But, I don't know how the policy thinkers are thinking about this.
But from the perspective of equity, Mukesh, is 1 year long-term by any yardstick at all, when all other assets, it's not 1 year, it's 36 months? What is the logic? Is there any other country in the world which defines 1 year as long-term? We are talking about growth with equity. Remember, we are a democracy, and we are a poor democracy. So can you really treat people who are investing in the stock markets, who by no standards are poor?
I can give you a counter argument.
Yes, please.
why was securities transaction tax introduced in the first place? 2, why is it that we said that we are going to reduce the period from 36 to 12 months to encourage investment in capital markets? And the last question is, what has gone wrong? Is there anything wrong in the existing system of taxation? And the fourth point is the overall certainty and predictability of tax policy.
Because just because you made one mistake, does one live with it?
Well, when an institution invests in India, they invest taking into consideration what the policy is.
What is the global precedence of something like this?
Non-resident institutional investors, India is an outlier in levying capital gains.
No, my point is 1 year long term in any other country. It's not.
There is no threshold. Because in other countries, you tax capital market transaction only if they are out of, normal trading operations. If it's long term, you don't levy capital gains.
So that's why if you don't levy long term, make it long term 3 years. That is the logical thing to do.
And I think also, Maitri's point, one thing that happened, I'm not defending what she's saying.
I just think that
all of this, actually, the financial savings, the savings in financial sector, financial savings, hasn't actually gone up at all. Which tells you there is a different issue on why savings aren't getting accreted.
But what percentage of the population saves in the equity market?
So I'm going to support the point you're making, which is it's a bit inequitable.
The stock market is not what the Aam Aadmi invests in. Let's be very clear.
Correct.
The person who invests in the stock market is a person who is willing to take a risk. He's willing to lose. He's prepared to lose.
You've been in the chair when
giving
policies like these are made. Do you believe at a time like these, when markets are so nervous, a risk like this can be taken?
See, this is the point. You can agree with the principle, but then there is an issue of timing. So if you feel that there's going to be a huge amount of volatility, you don't want to do anything that creates that volatility. And because it may be well said that, so there is a socialist argument that there are not very large number of people operate on the stock markets, etc. But then there is another argument, which is that if you don't have banks, etc., being able to lend enough money, then what is the other alternative that you have? So you need to deepen the markets, so that more people can go and borrow from the markets, or the equity can come from the market.
The secondary market doesn't give you any fresh money.
No, it's not. It's
only the primary, the IPO market.
You are right, but it's a question of how much confidence people have in that stock market, so that when the initial issues come out, they would still be willing to go there.
No, but there's no relationship. If you see the IPO market and the secondary market, the IPO market was down in the dumps, and the secondary market is doing quite well. So what you really need to encourage is the IPO market, and you need to have people must have confidence in the stock market. People must also have the income to be able to withstand a loss. So that's the big issue. So who are we trying to subsidize?
This. So how do you have confidence in the market? Now, what is being said here, I think, in my opinion, you need to have a kind of a predictability in your policies. Because if every budget is going to change every policy,
and they've tasted and we've made our mistakes,
then you have a problem. Then you have a problem. So sometimes you have to live with less than perfect solutions.
Right.
Only because you want, going forward, not to destabilize what is there. So the question you asked me was, when you're sitting in the policy seat, what do you do? This is what you try to look at. Sometimes you're right, sometimes you're wrong. But the intention always is to see that going forward, you do not create the kind of ripples that then will have a cascading effect, and you will have to then mop up a huge amount of debris going through the year.
You have the ears of policy makers very close to you. Is this going to happen, not going to happen? Put you on the hot seat with this one.
Well, it's speculative, and that's the reason I said I hope majority of your poll participants are incorrect. But I just wanted to make one point, which is, besides the point on certainty, any directional change, this is a directional change.
Sure.
You're going to levy capital gains now on a different basis. If there is any truth to this speculation, there has to be an impact assessment. I would like to see that if the period is extended from 12 to 36 months, investors will stay invested, government will collect more taxes, it is going to help meet the fiscal deficit target. Where is that?
It's very difficult.
Because I wanted to use the same argument. Last year, when there were consultations happening on that India is a high tax country, let's bring down the corporate tax rates, and I think it was a fantastic announcement, and everybody is looking forward. What is the phase out plan? Because there the rationale was our effective tax rate because of exemptions is 23%,
Absolutely.
Which used to be 17%. So we are really seeing a merging of the tax rates of effective tax rate and statutory tax rates happening. So I can understand a rationale to it. I've not been able to understand.
There is no trigger or a rationale for something like
And
this.
what is the impact
I'll have to slip
assessment?
into a really short break. I come back and discuss divestment versus strategic sale. And will this government have the political appetite to go ahead for privatization? You're watching the big picture right here on ET Now, and time to focus on the other two big tax points before I take it across to divestment. Sanjay, let me begin this round with you. When the finance minister did say that he is going to lower corporate tax but phase out exemptions, he was given a big thumbs up by corporate leaders like yourselves. And then when he began to do this, there were voices that began opposing it, that, you know, exemptions can't go from pharma R&D, it's going to dent IT, it's going to dent this, it's going to dent that. Can India Inc. make up its mind on what it wants to do with corporate taxes, and what should the government be doing at this point in time? Because he's now going to tell Parliament how does he intend to go on that, what is his roadmap going to be?
I'm not an expert on that. I think Mr. Butani should answer that.
Yes.
But my view is, I think corporate, when you go back to corporate India, everybody has obviously their own self-interests, and every industry has their own voice. And I think generally there is just so much of noise about this all the time that I think people lose the basic issue.
Right.
I think the direction that he wants to go in is the right thing to do.
True.
But, when you get into sector by sector, it just becomes kind of a cacophony, and then people just forget the basic issue. But I think the issue is that we should move in that direction.
So you're just the
not
right
an
man to
expert,
answer it. I mean, he's laid it. The right thing to do is to reduce it, but the moment he does that, people want exemptions to stay as well.
First of all, we have to recognize we are a high-tax country. Secondly, exemptions...
On a very low tax base.
Yes, but still, because you don't forget the impact of dividend distribution tax, which has almost touched 20%. From an economic policy standpoint, exemptions should go, no doubt about it. But bear in mind, we have three kinds of exemptions in our country. We have exemptions which are area-based exemption. We have exemptions which are given to a particular industry. Then we have the third kind of exemption, the weighted deduction for R&D for the pharma and biotechnology sector. So the question is how all of these should go away. And the government has laid down a roadmap in its January Department of Revenue circular. And what everybody is saying is that, let's take a case of special economic zone.
Right.
They are saying if the special economic zone is not notified before April 1, 2017, then there is no exemption after that. Now, if you're going to make a special economic zone operational in April 2017, you would have obviously started planning in 14. That's where the certainty factor comes in. So I think corporates are prepared for the exemptions to go away. There should be no exemptions in our statute 5 years from now.
Right.
I firmly believe that. The question is how it is done. So you need to have, if you're going to have a phased out reduction of corporate tax rates, you need a phased out reduction. As far as industry is concerned, yes, in corporate sectors with vested interests are going to cry.
True.
If I'm an R&D unit, I would say, oh, till last year I was getting 200% weighted deduction on my R&D.
How can that go away?
How can that go away?
That's a
but
fair
that's
point.
a
And I think the
debate
industry then needs to speak in that one voice. Let's begin about the other discussion, and that's divestment. And Swami, you did touch upon that in your first answer, that that revenue stream does exist for the government. I want to ask you a question that we had put forward to the CEOs. We asked them, do they expect government to tap the strategic sale route over divestment? And 71% of them actually said yes, which is quite surprising, because only 10% said no. This government has not really shown the big will or the big political courage to go in for strategic sale. Do you think that's going to change this time around?
It seems to me that this is a government that is not bold at all. Therefore, I have my grave doubts. The man who pushed this forward was not even Jaitley, but Jayant Sinha. When you see, who is associated with the strategy, the man who keeps saying is the junior minister and not the senior minister.
Right.
If you can't even privatize, if you can't even do disinvestment, are you going to do a much more difficult thing of strategic investment? What is your credibility? Given all these things, to my mind, there will still be talk about this. It is possible that some truly stupid things like Scooters India, I mean, surely
or HMT.
I mean, there are some things that surely you can do and should have done, but if you have not been able to do them all these years, I ask myself whether you're going to be able to do it this year.
Right.
I don't see this as, I mean, maybe one or two symbolic things may get done. But in terms of any significant change in the overall attitudes, I would be surprised.
69,000 crore worth of target, and it's not just this government. Every government in the last 10 years has never been able to meet its divestment target.
I think this sums up very well the point he made and what we said in the beginning. You don't have a path for everything. Choose out of the 60 PSU banks maybe only 10 should exist. How do you consolidate? How do you maybe divest a few?
Right.
Out of the public sector, you want critical 8 public sectors. You keep those over time. Have a plan to divest or disinvest. Similarly, Suti. I mean, we have assets lying in Suti which have no reason to be sitting there. So I think it's back to the point that it can be bold in the fact you can have a bold vision. I think that's welcome. I don't think expect it in 1 year, but at least if you can have a vision.
So you are of the view that the Suti stake doesn't need to stay with the government.
Why should it? Why would you be holding ITC, L&T and Axis? Why?
Investment has largely disappeared. So I don't know
Why
why
would you
the
hold
government
them?
is being so cowardly. I
That's
mean, where is the
$8 billion.
opposition?
That's
There is no opposition today.
52,000
So I don't know
crores
what's holding the
sitting.
government back.
The government that you were a part of previously decided not to touch the Suti stake, and in an interview that Mr. Chidambaram, your former boss, did with me, he said there is a reason why that Suti stake should not be sold. L&T is very strategic to our defense, and ITC can go back to being a tobacco company from just being the FMCG company that it's now come to be. Should the Suti stake be sold or not? What's your opinion?
Well, there are other
And will they have the will to sell it?
Well, there are other ways of unlocking that value. But the reason why it has not been sold till now, one is because like L&T is a very strategic company as far as the India's defense is concerned. But the other part also is true that there are very few companies which are professionally run companies. Most of them are houses, industrial houses.
True.
So if the question is, do you want to nurture more and more professionally run companies? If you do, then there is some way to, you have to protect them. But you can unlock that value, and that exercise had started in the finance ministry. For instance, you can have an exchange traded fund, and you can the shares of these companies can get into an ETF, which can be a close-ended 30-year fund, and you can unlock that value. So there are other ways of doing it. So it's not necessary, but the question is, you need to do that. You need to unlock that value, and it is important that you should do that.
You want to comment on that? That's a potent argument to be made. Don't sell stakes straight away, but leverage that stake that's sitting with you.
Any government that's serious about divestment, you need empowerment first. So if you can't have a divestment ministry, at least have a divestment commission. That should be the starting point. And I think lay out a target. I don't think that there is one solution fitting all kind of a... if the government in 99 and 2000 could sell whatever modern breads and some properties of ITDC.
Right.
I can't understand why in 2015 we can't do it. It's a tried and tested. I think the big disappointment occurred, if I recall, in 2003 on the, oil marketing companies.
Right.
When the Supreme Court came down heavily. The previous government did not do anything about it. So I think it's time to now start looking at divestment. We know the strategy of the government insofar as Maharatnas are concerned. But there are so many state and central PSU undertakings which are going to die a natural death.
So you might as well sell them and get some money out of it, like Swami pointed out earlier.
Suti, but for instance, look at Hindustan Zinc Balco.
Right, that's also...
They're already private companies.
The debate on that is actually very different.
And if you sell those shares, you get about 18 to
I don't know if there's going to be a bureaucrat who wants to sign on that file.
Even that they're not serving.
I'm saying I don't know if there's a bureaucrat who wants to sign on that file and be hauled up in the CBI and in CVC later.
So that is the thing that you need to do, is by getting into a program of divestment, which is agnostic to how the share market is working.
So you have a program that's...
And you do a retail.
Right.
You don't do block sale to big equity players, etc. Do it to common people of this country.
And let them buy things if they are available.
And as we've seen with NTPC, there is an appetite.
Yeah.
They said the market was not right, but you've seen the lead.
But they managed to garner quite a bit. Absolutely. I will then, Swami, let you have the last word on this debate. At 2016, when we talk about the debate, does 2082 or 2081, as has been reduced, looks like a wasted majority? We're still talking about whether they're bold, whether they will have the political courage, the appetite, what should be done, not be done.
No, I would say that 281 is an illusory and irrelevant figure because you don't have a majority in the Rajya Sabha. You passed seven decrees, 7 ordinances. At that particular point, you were really saying is that because I have a majority in the Lok Sabha, I will be able to bulldoze my way through the Rajya Sabha. It was a bold move. I applauded at the time because I like boldness, even if you sometimes fail. But yes, without question, it failed. So having failed, it's very, very clear that this 282 has a very limited meaning. The real thing that matters is you are nowhere near in the Rajya Sabha. After the next Rajya Sabha election, will you be in a position to go ahead? To what extent have you tied up informal arrangements with the regional parties?
All the floor management
the Congress
will
is not going to play ball with you.
Yeah.
If you can tie up the deals with the regional parties, get yourself a majority on most issues in the Rajya Sabha, then you are back in business, and it has nothing to do with your numbers in the Lok Sabha.
All right, nothing to do with the numbers in the Lok Sabha, much contrary to what we thought in 2014 May. But that's then completely out of time here on this edition of The Big Picture. Our super panel is going to be back tomorrow morning to be discussing the fine print of the Budget 2016 and whether this is going to course correct the Indian economy and set in the very, very virtuous cycle of investment and revival of growth. Thanks very much, viewers, for tuning in.